The purpose of this video is to take a quick look at the impact war has had on the market, if any. Traders often become a little jittery about the time when U.S. military offensives are about to strike. The purpose of this is to examine what was the immediate impact of a strike in the Middle East on specific dates in history over the past decade or so. We're going to start with the October 7th offensive in Afghanistan. Take a look at what happened immediately on that date and thereafter. October 7th, 2002, Horn of Africa. March 20th, 2003, war in Iraq. The March 16th, 2004, war in northwest Pakistan. And then we'll take a look at the Libyan crisis on March 19th, 2011. This is the 7th of October, 2001. First market date was October 8th, 2001. Now the question is, did the strike that took place have any bearing on the market? Was there a major impact on the market on that date? Or were there other market internals that have had impact on market activity that have no direct relationship to the military offensive? Horn of Africa, October 7th, 2002. The Iraqi offensive, 3/20/2003. Now, this rally that takes place here likely had some bearing or had some relationship to this offensive, in my opinion. There were other market internals that would have contributed to this. But I would suspect that there was some impact that this offensive had on the market, given that rally took place over a 2-day period. It may have had it. I don't know historically what was going on back then in respect to other market internals, but this seems to have a little bit of a bearing, but not much. Northwest Pakistan, 3/16/2004. Saddam Hussein executed 12/30/2006. It was a holiday. I don't see any direct relationship. The Yemeni crackdown. The market had already been in rally mode by the time this occurred. A retracement can easily be expected. There's the Libyan offensive, 3/19/2011. That was a holiday, pardon me, that was a weekend. So the first date thereafter was 3/21. Osama bin Laden killed, market was at a high. And that brings us up to today. Is there a direct relationship between military offensives and market activity on the date of the offensive? I doubt it. I seriously doubt it. So if the U.S. makes a strike on Syria on August the 29th, should we expect that that's going to have any direct impact on the market? Probably not, in my opinion. There are many other factors that are much more significant. Here we have the most recent point of, well, I shouldn't say most recent, but we're running a composite market profile from the 24th of June to date, 1636 being a low value area. But we could see that there was next to nothing in the way of volume right down here at 1624, roughly 1624. The market recently dropped just within the last couple of days down to that point. We've got another higher volume area right around 1644, 1645. So let's just look at where we are right now. And you can see the market dropped right down into that neighborhood within the last, let's see, that was yesterday, I believe, yeah. No, that was, pardon me, that was this morning on the 28th. And now we're moving right back up to this area where we had a previous high right there at around 44 and a quarter on the 27th. So it looks like we're going to go right back up there and then maybe go a little higher. We'll see. But in any case, I don't believe that there's any direct relationship, no direct correlation, in my opinion. So nothing to worry about, in my opinion. That having been said, this is Rod Kusin and Spooman for Risk.